Welcome to your Mortgage Insider Update on January 26th. It is Fed week. This Wednesday, we'll get the Federal Reserve statement. Not really going to be a lot of movement in their interest rates. They're widely expected to just hold everything steady after cutting 3 times at the end of 2025. But we are going to get some commentary. The overall 3-month average on inflation is running at below 2%. But the annual year-over-year inflation number is still hovering around in the high 2s, so not making substantial progress closer to the Fed's target for inflation at 2%. Likely just going to be more to the status quo. But some good news this week. Fannie Mae and Freddie Mac a couple weeks ago were announced through President Trump that he's authorized or basically forcing them to buy up $200 billion of mortgage-backed securities. We just found out that as that approval came through, it's actually double that. So Freddie Mac will have $225 billion. Fannie Mae will also have $225 billion of mortgage-backed securities to purchase in the coming months. That should help push interest rates a little bit lower as we hopefully going to get some softness from the Fed as far as being open to cutting interest rates again down the road if the inflation number keeps coming down. But that very positive news from Fannie Mae. So let's check out and see what the rates are doing this morning on the charts. And a positive start with rates down on Friday and starting off today, getting closer to that 4.20%. That's a number that we've been watching. We're going to take a look at the 10-year specifically, but mortgage-backed security prices higher. When I mentioned Fannie Mae and Freddie Mac are going to buy more mortgages, more buyers is going to drive the price up on the mortgage-backed securities, which drives the rate down, which we'll focus on the 10-year as just a barometer on which direction the interest rates are going. And we can see that we did hit a high point this last week after having some big news in the last couple of weeks with both President Trump announcing what he is bond buying for Fannie Mae, Freddie Mac, but also we've had some major escalation worldwide. The fight over is the United States going to try to take Greenland was one of the most recent ones. We saw a little bit of a spike on the 10-year debt for the United States debt, and then since that's come back down. Now, we haven't made it below the 4.2. Actually hit on that this morning and bounced back up a little bit. All in all, a lower 10-year Treasury is a positive sign. We've made it below the 200-day average and now need some positive reinforcement from the Fed. We could see that 10-year get back down to the levels that we saw from back in the mid part of January since the first of the year into December. We had stayed in that range and then broke above it. So it'd be a welcome news to get back into the lower range below 420. Or even lower as time goes on. Have yourself a great week and pay attention to the news on Wednesday when you hear the Fed's announcement. We'll give a summary of that here. So subscribe to this YouTube channel if you want to see an update on first and next week. Take care.